Welcome, everybody. We've got May's Verivest webinar, and our guest today is Richard Wilson with the Family Office Club. So, Matt, take it away.
Kelly, so I thank you for so much for putting it all together as always. I appreciate it, and glad this morning to be here with everybody. Thank you for joining us. I'm here today with someone I've known actually for quite a long time now. Richard Wilson is the kind of the brainchild and the owner and the guy that's really run the Family Office Club. So, Richard, thank you for joining us this morning on the show.
Yeah, appreciate you having me here. I think we met probably about 15 years ago when I was in Oregon just starting things out.
Yeah, I remember coming out to Hillsborough of all places,
Yeah.
which is for people not from Portland. It's a suburb of Portland out on the west side, and I remember driving out to your office and meeting for the first time and hearing your story. So why don't we start there and just give people a little bit of background on kind of how this all started and what you were trying to achieve and just kind of the origin story.
Yeah, sure. So basically at a young age, I got myself into a position doing Sarbanes-Oxley consulting, which was the most boring job on planet Earth, but it paid very well. And I said to myself, who at age 21 is going to want to pay me well to do something that's actually exciting that I want to do? And I figured I had to sell commercial real estate or raise capital. So I decided to go for like the eat what you kill capital raising route, got a job raising capital for hedge funds and SMA products. And while doing that, nobody wanted to hear our pitch on the wealth management side unless all of their clients were accredited or wealthy. So I stumbled on one group that was a family office and they said, oh, all of our clients are wealthy. We're a multifamily office. And I was like, oh, okay, well, I should only be calling on you and people just like you. And so while trying to do that, it was very hard. Nobody was giving me any helpful information online except for like a Bloomberg and Financial Times journalist who had never worked a day in their life in the industry. So as I realized that, I was like, well, I'm just going to blog on the industry, teach myself the space. And every time I learn something, I'll put a blog post out on it. And then the website just took off and
What
everything
time
kind of
frame is
exploded.
this?
That was 2006 that I started raising capital. 2007 website took off, got on the front page of the Boston Globe, 1,000, 3,000, 5,000 hits a day to the site. That's when I started the business.
And so when you started that business, what was the goal of the business and what did you kind of see? And I know we talked about this is probably around the time that we first met, maybe
Yeah.
a little after that, but what did you see? What were you trying to achieve as you kind of started this business that you're
I mean,
running
this,
now?
yeah, I mean, at the beginning, I was just trying to teach myself, like, what is a family office? So selfishly, I could call on them, raise capital, build relationships, just really just doing it to learn myself. And I was just like, well, I might as well share what I'm learning. And then the website started taking off. And then I thought, okay, well, I need to change who I'm working for because my current capital raising team principal did not like that I had this blog and that I was being interviewed for the newspapers and not him with 30 years more experience than me. He was like, why are they asking for you? And I was like, it's a silly little blog thing. And he didn't like that so much. And by the time I got another job offer, the website was making me more money than the job offer offered. And so then I just started, doing 10, 12 blog posts a day instead of one a day or one every 3 days. And we became the most visited website in the industry due to that.
So then what has happened since then? And like, what do you to describe the business today? And kind of know you put on a lot of events and so forth. What are the events designed to do? And like, who are you serving? And just kind of describe your
Yeah.
ecosystem.
Yeah. So over the last 19 years, we've put out more videos on family offices than every other family office brand in the world combined. So we have lots of video content. Published 13 books. We've created 50 of our own AI tools. We've hosted 325 in-person events, and we do 30 events a year now. We have the most visited website in the industry, which is familyoffices.com, and we have the biggest media platform. So we've done 42 little mini acquisitions of other investor clubs or failed investor clubs or digital assets, and we have 300 social media groups, and we have 16.5 million members in those social media groups. And that is in part how we source deal flow and learn things and gather data for our AI tools, et cetera, and fill the events. And so we're like a membership model. We used to sell event tickets, but then when you sell event tickets, nobody signs up until like 2 to 6 weeks before the event in general. And some months you find yourself being a nonprofit, and then some months you bring in a bunch of cash, and it didn't create a sense of community. So we're a members only platform now. So when you register, you get access to a member portal, 50 AI tools, 2,000 investor talks, and all 30 events a year, all within a portal. And most people just come to like 2 to 5 events a year. Nobody comes to all 30. But like that way you get to know people and it's a real sense of community and not just kind of like going to random events with random people at random times, you know? And so that's kind of the one of the things that kind of sets us apart.
So what happens at an event? Like just describe an event. What are people going there to achieve? What's kind of their purpose? And how does it happen?
Sure. So we host two types of events. 5 times a year, we do a summit. So, like our next summit is New York. We have 55% investors attending, 45% founders or fund managers. On stage, we have 75 speakers on stage over just 2 days. So, for those of you who have ran events or gone to a lot of events, it's about double what you'd normally hear. Because normally there's some gold fund or some hedge fund that's paid a lot of money and they get to speak for 45 minutes or an hour. Our sponsors speak for 5 minutes each. And then we do discussion panels. And then we do a fireside chat with a centimillionaire or a billionaire. And so it's like watching an F1 race versus watching golf on TV, right? It's like we try not to put people to sleep because our what we see family offices are really just super founders, like super entrepreneurs. And a lot of them are ADD, a lot of them are fast moving, a lot of them are high energy, a lot of them are low patience. You just getting a lot done per minute. So if we put people to sleep, they're never going to come back to our events. So we make it very quick. Like say who you are, what you're up to, add some value to the audience, and then get off the stage. And if people want to connect, they'll find you in the audience or find you in the portal. And so that's our summit model. We do those 5 times a year, and then 300, 400 people per event type events. And then we do 20 plus events that are workshop and masterminds. So like we do 8 full day, 10 a.m. to 4 p.m., laptops out, artificial intelligence implementation workshops. We teach you how to use Claude projects, Claude skills, Claude co-work, our 50 AI tools, and like you leave the day with things done and implemented. And then some of the other workshop masterminds are like investor speed networking or a capital raising boot camp. So we do 20 some of those a year, and they're all in Dallas, LA, New York, Fort Lauderdale. They're like spread all over the country, so it's easy to get to. But that's our model, 5 summits and then a couple dozen mastermind workshop type events.
So at the summits, I mean, you talk about centimillionaires and billionaires and founders, super founders, et cetera. How many are there those people there? I mean, my experience at a lot of family event office events over the years has been you get somebody that works for the family office who wasn't necessarily the founder and who's there on behalf of that family and isn't super engaged necessarily. And like, how much of that is there versus the actual, person who raised the money and makes the decisions and so forth?
Yeah, you get both. Like under 20, especially under like 40, 50 million net worth, you're always pretty much getting the founder because they don't have somebody to send for them, right? And so
Yeah.
like you're getting a orthodontist who sold his practice for $12 million. You're getting we've got a guy that he's a doctor, has like 4 physical training, like physical therapy centers in the New York area. He just confirmed to coming. We have just high net worth, kind of mass affluent, wealthy folks coming. We don't turn them away, like former pro athletes. We have NFL and NBA players coming. We do a pro athlete investor panel as one of like the 10 panels at each of our events. But then you also have like the super ultra wealthy. And when you're worth 50 or 500 million or somewhere in between, you do have people working for you. So some of them come in person, and we encourage that by having them come to a special dinner just for some of those folks. We have them do fireside chats with me on stage. I just ask about what I'm curious about from a founder perspective on how they scaled to that level and how they navigated their exit or what lessons they've learned having their own family office now. But there'll always be a mix, right? You'll also get the CEO of a multi-billion dollar multifamily office. You'll get someone that is like my friend Randy Abels was very senior at RSM Accounting, and now he is the head of a very well-known billion-dollar plus single family office. And they have a 6-person team, but Randy comes to the events, not the actual founder who's a
Yeah.
billionaire. So you get a mix of both for sure.
Yeah, and then so let's talk a little bit about them. It's kind of what I think a lot of people, really want to know, which is what do managers, what are some of the mistakes that you see them making, maybe that they shouldn't be doing, and what are some of the things that make them effective? I mean, because they're obviously there to
Yeah.
raise money, right? But
Yeah.
raising money is a long game, and it's, it's a relationship thing. Like, give some tips and
Yeah.
ideas and thoughts about what works, what doesn't work, and why.
Well, first off, I want to compliment you because I have 130,000 direct connections on LinkedIn, and we have 18.5 million followers if you include the 16 million members we have registered. And of everybody on LinkedIn, you have top five most genuine insights on things that people mess up.
Well,
Like
thank
you and
you.
I think so similar, right? It's kind of like, it's like, why do people do this? Like they're always doing these same things that are so wrong, right? And it's like, it becomes obvious after 2 decades, right? So, like, I would say some of the things they mess up are they come to an event and they expect family offices to allocate like a high net worth person. Like, they come to one event and be like, oh, I didn't raise the $10 million. Or like, oh, it doesn't seem like anyone's interested like right now. And maybe it's because they rushed around the room and literally are basically asking people, "Do you have money? Do you want to invest in my deal? I mean, look how amazing my deal is." Like anybody can put anything on a piece of paper. Like they do not care how amazing their deal is. They care who you are. And if the words you say sound like a 1 out of 1,000 asymmetrical opportunity of this person's a real deal, this is credible, unique, high conviction, positioning is unique, the structure may be well thought out. And also, like, are you just someone they want to do business with? Do they trust you as a business peer? Or are you just like you're pushing a product on them and they want you to become a robotic LP in their fund and there's one option and it's being an LP? Like there's a bunch of things like that that just like expectation management. Like a $40 million check is equal to 400 $100,000 checks. So maybe it's going to take not 400 times longer, but if it takes 4 times longer, or even if it takes 40 times longer, it's still 10 times more effective than raising 400 $100,000 checks, right? Like people get that wrong in their head. And we had one person that founded a very famous company that everyone here would recognize the name of, and he came to one of our events and said, "Hey, I was disappointed last month. I did not raise all $10 million coming to one event." And someone on your team told me that I'd raise all $10 million. And they're like, well, someone might have said that to you about our events, that it could happen, because for sure it could, but we would never promise that to people, or we would be charging you $250,000 to come to one event, not $2,000 to $10,000 for a whole year. You're like, you know what I mean? So like, like $1,450 is our 6 month membership at a base level, right? So like, we're not charging you
Yeah.
30K per event. So that those are two things, and then like some bullet points I always say that I think would just add the most value to someone raising capital out of maybe anything we talk about here is that what people always mess up is they don't have a clear one-liner, they don't have a one-pager. If they have a pitch deck, it's 40 to 70 pages long instead of 12 to 15. They don't have a 1 minute video of the founder explaining the strategy, right? Like if without the one-liner, the one-pager, and the 1 minute video, I feel like you're just kind of dead in the water if all you have is the pitch deck. It's like it's not very accessible.
Yeah. What do you think is, like you mentioned, like the 40 million is, 400, $100,000 checks. What do you see people that are going to invest $40 million? Do most of the families, in your opinion, do they like pooled investment funds? Do they want to do individual deals? Do they want to do joint ventures? Is it all over the map? Like how do people want to invest that money?
Yeah. Well, one thing is to invest 40 million, you have to be talking to somebody managing billions of dollars. And it's
Yeah.
just like the rule of thumb, right? And so not everyone's going to be able to do that. The people who do that are RIAs, multifamily offices, or quasi-institutional family offices, so very top of the industry. Um, in general, family offices want to invest in direct deals more often than funds, or it's smart to have both options. It is more
Hmm.
efficient for an RIA to conduct due diligence, though, and write that big
Fun.
check on someone who has a fund because they get diversification. They bless
Yep.
you once with due diligence, and then they monitor you. They don't have to look at every single deal as one-off due diligence. So the more institutional it gets, the more it does even out, and they'll look at a fund just as much as a direct deal. But the more that you're working with somebody who's 300 to 500 million or 100 million net worth or 50 million net worth, the more it is 2 to 3x faster I've found to close direct deals with family offices versus only a fund. And sometimes people are most comfortable coming in the fund after they've gone through a couple direct deals.
Yeah.
And so I think having a couple options on the table is important. And then the last thing I'd say is just that one of the fastest ways to get a raise done is to find the most credible person who could write a check to you and give them amazing terms for the strategic value of one, their reputation, and two, maybe opening doors or getting you distribution or access to deal flow. And then if you get them in, the rest of the money starts coming in faster because now people are like, oh, CalPERS came in. Oh, this person came in who everyone in the industry knows. That means a lot. So now part of your raise is done, maybe on worse economics for you, but now you have momentum.
Yeah. You mentioned RIAs and say multifamily offices, and I mean that's kind of a different beast. I mean, how do you equate that in the family office world? I mean, is that part of it? Is it a different beast, or like how do you look at that?
Yeah, I mean, we include it as part of our world just because, they're using the word family office and they're basically working with ultra wealthy folks who are usually 10 million plus net worth each. And we just see it as a hub spoke access point to ultra wealthy families. So we'll interview the founder of a $12 billion multifamily office that serves, 40 clients worth 140 million each on average. And, you can learn things from like, how did they close their clients? How did they meet their clients? Why did their clients trust them, et cetera. But then also they can be a relationship point where if they say yes to a deal, now like it's not worth their time unless they can put at least $10 million into something. So it's a very high leverage point. But if you don't have a really strong relationship and you're not going to check some of the boxes of being at least quasi institutional, is it the best use of time? Well, like the relationship and your offering better be like really, really 0.1%, or it's probably not a place to start with if you're looking to launch something or get something
Yeah.
going, unless you're willing to give up economics and make them like an equity partner or just make them like a co-GP partner at the LLC mothership level. It's going to be tough getting them in like early on something new unless you're just truly exceptional straight out of, some big Silicon Valley shop or real estate shop.
Yeah, that's one of the questions that just came through, but it's like, what do you think is kind of the bare minimum experience track record required to have a chance with a typical family office? Like how much experience do you think people need to have?
I mean, zero is the right answer because if you can source amazing deal flow, then you could JV and co-GP with the family office, and they take the ball down the field, and you structure a JV with it, and your only role is sourcing the deal, right? Like if they really think you can't handle taking the ball down the field yourself, if you have the ability to source the deal and do the deal, but you don't have the track record, then can you structure something so that they have the safety of collateral or pref equity return or initial cash flow until their money is back in their pocket to de-risk it? So like structures can help you get past a lot of things, but the relationship matters more than the structure. And many times the structure matters more than the asset type or even the deal strategy, because you can take in a great deal, but if you let someone structure it however they want, they could get all the collateral, all the cash flow, you get capped at a 1x return, right? Like, so there is no minimum to get started, but trust matters more than what you write on the piece of paper as the promised IRR. And a lot of investors have learned that the hard way these last 2 years. Every investor I know has some blood in their mouth from distributions cut off, total losses, potential more total losses, recaps, and just kind of ugly, stressful situations.
Yeah, it's been a rough few years for sure in the real estate space.
Yeah.
Speaking of real estate, like what percentage of your kind of client base and managers would you say are real estate versus other asset types like private credit, private equity, other oil and gas, other types of managers?
Yeah. I would say 40%, it sways between 30 and 45%, but about 40% are real estate. But the one thing to know is that if you're an orthodontist and you sell your practice, or you have dry cleaning shops and you sell your practice, you're Silicon Valley, you go public, 90 plus percent of advisors and founders who go through that will allocate some percentage into real estate assets. And the entrepreneur type wants some hard assets with low debt or no debt that produce cash flow. And so like it doesn't matter what industry you're from, that happens almost always. And like the founder of Telegram was like one of the only people who's like, nope, I don't want to own any assets, don't want anything in the real world, basically tying me down at all. But like most investors don't think that way. And so it's not like people from the dental industry or from other industries are like, I have to have like dry cleaning businesses, or I need my HVAC plumbing companies. Like, but with real estate, people sway to that. And so we sometimes get complaints like, oh, why is there so much talk about real estate? And it's like, well, because the tech nerds want a little bit of real estate after an exit, and so do the doctors, and so do the billionaires. And like that's just gravity on planet Earth. So if you go to any family office event in the world, unless it's only for tech family offices or only healthcare, real estate is going to come up, right? It's just a nature of
Yeah.
the beast, you know. So
Yeah.
more than some people would like, but it comes up.
Yeah, you talk a little bit about so different types. It sounds like, I mean, obviously the structure of the deal. I mean, it's a lot of, I mean, I've met with thousands literally of managers over the last 10 or 15 years. And sometimes there's some that run just a fund, there's some that do only syndications, there's some that do only JVs, but a lot of them will do JVs and syndications and funds and have some flexibility because at the end of the day,
Yeah.
right? Different capital sources want to do different structures. And if you're in the business of doing deals and managing deals, right, it helps to be flexible. Like, do you see that being the case in your experience
Oh
with these
yeah.
managers?
Oh yeah, couldn't like stress that more. I think deal structure has totally changed my life. Like our business just started taking off once we understood how to custom structure deals ourselves. And the three things we try to help people on is proximity, like being close to ultra wealthy founders and family offices and peers, and then super intelligence, AI essentially, and then scale, how to scale through deal structures, deal origination, vetting opportunities. And the reason I bring that up is like out of all the 50 AI tools and agents that we've created, like my number one favorite is one called Deal Structure Ninja. It's trained on 1,000 deal structures. You say what you're solving for, what business you're trying to acquire, what you're trying to sell, what you're raising capital for, fund, whatever, and what the industry is. And then it will look at the 1,000 deal structures and then custom structure 10 different deal structures to consider. And then what happens is that after that, you say, well, I like deal structure number two and number five, and it will give you 10 more like two and five. And you say, oh, I like deal structure number, six and nine. It'll give you 10 more like that until you find a deal structure you love. And then what happens is that you will be able to um, explain, like the AI tool will explain to the counterparty why the deal is structured that way and to your attorney so that you can close them on that deal. And I just find that if you don't do that, then many people will say no to you, and it's because your deal structure was boring, average, not sweating for them, didn't take care of their top worries. Like you'll just make so much less progress in the world. And many people have told me, no, go away, Richard. We're never going to do this deal with you. You've approached us over and over again for years. This is not happening. And then I will say, well, what about under this structure? And then the deal will get closed, and then we'll get the deal done. And if it wasn't for deal structure, we never would have.
Yeah, and is that like a proprietary tool of yours, or is that some other thing that's off the shelf, or what is Deal Structure Ninja?
Yeah, we built that tool internally for our members. Again, like the membership's not $100,000 a year. It's like super accessible. And if somebody doesn't want to come to any of our events, we have like a virtual version of the membership. But like relationships are built in person. So in person is where things get done and things happen. But essentially, we built all of the AI tools ourselves on the 3 million words transcribed from our live events, from the 1,500 investors who've spoken on stage at our events. But then we also looked at all what like deal structure, any deal structure case study or example we could find from Silicon Valley, real estate, institutional deals, private equity, leveraged buyouts, pref equity deals, convertible note deals, gross revenue royalty deals, et cetera, like crazy in depth. Then we took the like emergent lessons and case studies from that to train the AI tool on it and just went super deep on that. So it have this master library of deal structures. And that's what we did really to build out this tool and why it works well.
So so it's an AI tool. You've mentioned AI a number of times here. So like how has AI sort of impacted your business? Sounds like you've gone deep on it. Like what is your take on sort of AI and how people are applying it and just general comments on application of AI?
Yeah, sure. So basically, we found that kind of like when COVID hit, everyone had to adjust. If you're doing live events and COVID hits, you have to go to virtual events. And so the faster you adapt, the better life will be. And we found this, we're finding the same with AI. It's like the faster that you figure out how to leverage AI, the more thorough you could be, the more effective. Everyone seems to focus on AI being something that helps you just move faster and get things done. But what I found is that it helps catch mistakes. It helps unlock creative opportunities. And you can look at 30 sides of a Rubik's Cube instantly and just get data points and accountability and honesty on a situation faster. And so that's really at the core of it all. And so what we've done is just tried to codify like the things you share in LinkedIn. You and I think like very similar in ways. And so all those lessons we've kind of baked into the AI tools, those things that like we used to teach people, here are the 25 different things to consider while building a one-liner, right? Like if you want to write a one-liner, what do you do to write that one-liner? Well, there's 25 different points to making an awesome one-liner to describe what you're doing. But we don't have to teach it anymore. Now we just have people put in their PPM and their pitch deck, and our one-liner pitch tool will write 7 versions of a one-liner based on those 25 criteria. And now they have their one-liner created. And so the tools actually do things for you to make you more effective. And it's just codifying what we've learned, like watching $1 billion of deals get done in the club. So that's kind of at the core of it all.
So it sounds like people who are members of your, and you have a variety of different membership opportunities that they would get access to some of the AI tools that you're using that can help
Yeah,
them in their business.
yeah. The membership includes access to all 50 AI tools. And then there's like a couple of tools that only VIP or verified members get. And those are like the investor data set driven tools. And for the verified membership, we do background checks on people and make sure that it's very likely they are who they say they are. And then you get a blue check mark next to your name, kind of like a Facebook or Twitter type thing.
Yeah, well, we're coming to the bottom of the hour here, so if anybody else has any questions, let us know. I do see a few of them here. Let's see if like quality opportunity, opportunity zones, is that a big thing in the family office world? Would you say, Richard?
Yeah. Yeah, for sure. I would say that like it's definitely a big thing. That's one example, Matt, where a multifamily office connection or CPA connection can be super powerful. We had somebody with an opportunity set like that. He met one CPA at one of our events and he had 42 clients referred to him. And the reason why you need to use a hub spoke is that there are some clients, like I have a billionaire client we've done 19 deals with. He has a publicly traded company. Every year he has capital gains problems, right? But like most family offices, they have like a big capital gain problem, and then they cruise along for a few years and just have some small capital gains problems. And so, like in real time, people finding you or hearing of what you offer is a little bit extra of a challenge because people need what you have mostly when they have a big gain to handle, right?
Yeah,
And so I think that's like a unique aspect of that type of offering, and in a situation where you need advisors to know and trust you, so you get that referral.
yeah, yeah. Uh, yeah, I'm just looking at the questions here. Some other we've already covered. But so, Richard, I appreciate you being on today, man. How do people reach you if they want to get a hold of you and learn more about your offerings and so forth?
Yeah, sure. So the best place to go is just familyoffices.com. And then also, my email is there on the screen, just richard@familyoffices.com. And then, if anybody wants to shoot me a text message or an audio note, it's just 305-333-1155. And I appreciate you having me on here, Matt. So if you or a team member would like to come to our New York event coming up in a couple of weeks, May 28th, 29th, or want to come to our AI implementation workshop in June, or something else that we're hosting across the country in different cities, let us know. We're happy to have you as our guest, just for a thank you for having me on here.
Yeah, of course, man. It's our pleasure. I've always been what kind of watched you, up close and then from afar here, and we've stayed in touch over a lot of years. So, man, I've been very impressed with the growth and seeing what you guys are doing. So it's super exciting. I appreciate you being here. If everybody wants to reach out to Richard, please do. And hopefully this has been helpful. So thanks everybody for being here. We'll be back again next month. And thanks for joining us, Richard. Thank you. Aloha.
Thank you. Yeah. Thank you,
By
Matt.
the way,
Keep in touch.
Richard's in Hawaii, so he's up early this morning to share all this information with you also. So thanks, Richard.
That's right. Thank you. Thanks for having me
All right.
here.